Good afternoon, everyone. Please come to investment accounting. So, today's topic is very interesting, and that is convertible debentures. So, all of you will come to paragraph number 15. All of you will come to paragraph number 15, and this is about convertible debentures. So, what are convertible debentures? What are convertible debentures? Debentures which are fully or partly convertible into shares. So they are called convertible debenture. They are called convertible debenture. So if you are the investor, you were earlier holding a debenture, and after conversion you will be holding equity shares. After conversion you will be holding equity shares. Okay, so in your books debenture will be removed from the books, and in its place equity share will come. So your entry will become investment in equity shares account debit to investment in debenture account. So now you will have investment in equity share, and you will derecognize, remove it from your books, investment in debenture. So that is the entry for conversion of debenture into equity shares. So let us read the notes. If investments have been made in convertible debenture and shares have been received in part conversion of debenture, then the cost of debenture converted will be credited to investment account. So the student will have to prepare some working note here. In case of conversion, in case of partial conversion, what is partial conversion? Let us say only 20% of the debenture. Let us say only 20% of the debentures got converted into share. So I have to transfer only 20% of the cost of debenture. I have to transfer 20% of the cost of debenture to equity share. So student will have to find out what is the cost of debenture that was converted into equity shares. What was the cost of debenture that was converted into equity shares? A separate account of investment in share will be opened. So you'll open an account called investment in equity share account, and such cost will be debited to investment in share account. So we are going to calculate cost of debenture which got converted into shares, cost of debenture which got converted into shares, and debit the investment in equity share account and credit the investment in debenture account. One more thing, one more important thing. Suppose a company pays interest on 30th June and 31st December. Interest payment dates are 30th June and 31st December. Interest payment dates are 30th June and 31st December, and conversion took place on 30th September. conversion of debenture took place here only. So now what will happen? The company will have to pay interest for these 3 months from 30th June to 30th September. Interest will be paid for 3 months from the last interest payment date, from last interest date till the date of conversion. Debenture holders are entitled to interest. Debenture holders are entitled to interest, so interest will be paid. Further, interest on debenture up to the date of conversion will be received and credited. So the investor will pass the entry as usual, bank account debit to interest received on converted debenture. Bank account debit to interest received on converted debenture. Bank account debit to interest received on converted debenture. Sometimes the student may forget to pass this entry. You have to pass the entry for interest received from last date of interest payment till the date of conversion, if conversion takes place between two interest payment dates. So just I will summarize quickly what are the steps you have to perform. You have to perform the cost of converted debenture. You have to perform the cost of converted debenture. You have to see whether the company is following FIFO or weighted average. You now know how to solve FIFO and weighted average. Then you will pass entry for conversion. Then you will pass entry for conversion, which is this entry. And then you will pass entry for interest received. Then you will pass entry for interest received. Bank account debit to interest received. Bank account debit to interest received. Okay. So this is what we will do. And for the remaining debenture, continue the accounting as usual. For remaining debenture, for debentures which are not converted, continue accounting as usual. Continue accounting as usual. Continue accounting as usual. Okay. And you have to open one more account, investment in equity share account. Open one more account, which we will call investment in equity shares account, which we will call investment in equity shares account. Okay. So this is the steps we are going to perform in case of convertible debenture, when we have made investment in convertible debenture. So in case if you want to note down fast or take a photo. Okay. In case if you want to note down, note down or take a photo. In the next two questions we are going to solve, we will require this knowledge. In that paragraph number 15, there is a question also. There is a question which starts with T limited, TEE. Paragraph 15, there is a question. Okay. T limited purchased on 1st May 2011. T limited purchased on, underline purchased. So this is the date of purchase. In this question there is no opening balance. In this question there is no opening balance. Enjoy. Because you don't have to calculate opening interest accrued. If there is no balance, there is no opening interest accrued. T Limited purchased on 1st May 2011 13.5% convertible debenture in D Limited. T in D. What a name. T in D. Of face value 5 lakh. This is face value. At rupees 105. This is the cost. Now it is not given in the question. There is a mistake in the question. They have not mentioned whether it is X interest price or come interest price. This is the error in the problem. Student will have to assume something. Student will have to assume that it is X interest price. So you have to make an assumption. No more query on this. Can I assume come interest price? When I am saying X interest price, we will assume all of us together. Then all of us will assume X interest price only wherever it is not mentioned. Okay, matter closed. Interest on debenture is payable each year on 31st March and 30th September. So interest payments are on two dates. Interest payments are on two dates. These two dates underline or highlight. The accounting year adopted by T Limited is the calendar year. Accounting year is calendar year means the year ending date will be 31st December. In this example, the year ending date will be 31st December 2011. Year ending date will be 31st December 2011. Mark it somewhere. The following other transactions were entered into in 11 by T Limited in regard to this debenture. So some more transaction they have entered into. So first I'll erase all this. Now you see 1st August. Purchased rupees 2,50,000 debenture. This is face value. Face value of debenture at 107 come interest. This time they have mentioned come interest. This time they have mentioned come interest. October 1st, sale of rupees 2 lakh debenture at 103. This time also they forgot to mention, but not required. But not required. X interest or come interest is not required. Please guess, I will give you a chance to guess why I am saying X interest or come interest information is not required on 1st October. Anybody, any idea? Anybody, any idea why they have not given at 103 whether it is X interest or come interest? The reason is interest payment date is 30th September. So up to 30th September the interest has been paid. Up to 30th September the interest has been paid. And today the transaction is happening on 1st October. So for one day, no interest. For one day, no interest, and therefore they have not mentioned. So this is okay because there is zero interest accrued on 1st October. You are right. Come to December 31st. This is our year ending date also. Receipt of 10,000 equity share in D Limited of rupees 10 each in conversion of 20% of the debenture held. So this is an example of partly convertible debenture. This is an example of partly convertible debenture. 20% debentures got converted. 20% debenture got converted. So I will have to check how many debentures do we have. Here we have debenture 5,000 rupees purchased. Here we have another debenture 2,500 purchased. And here we have sold 2,000 debenture minus 2,000. So total debenture we were holding was 5500. Purchased 5,000 again purchased 2,500 and minus sold 2,000 into 20%. So 1100 debenture, 20% means 1100 debenture. 1100 debenture got converted into equity share. 1100 debenture got converted into equity share. So I will have to pass one entry here on 31st December. The entry will be like this: investment in equity share account debit. Don't write, I will ask you to write nicely. Investment in debenture, debit equity share investment and credit investment in debenture, but you have to calculate the cost of 1100 debenture. But you'll have to calculate the cost of 1100 debenture, and that is the amount we need to calculate. We will discuss. Next point, the market value of the debenture and equity share at the end of 2011 is 106 rupees for debenture and 15 rupees for equity share respectively. Prepare debenture investment account. Prepare investment in debenture account in the books of T Limited. In the books of T Limited on average cost basis. Average cost means weighted average rate we have to compute. So this question will require you to do some extra work. You have to calculate the cost of debenture which was converted into share, and for the purpose of calculating the cost, you need to find out average cost. One more entry which is hidden entry, you have to pass interest received entry. Interest received on convertible debenture. This they have not mentioned in the problem, but the student should know that up to 30th September, the interest has already been paid. The conversion took place on 31st of December. Therefore, on the converted portion, that is 1100 debenture, interest will be received for 3 months. Okay, interest will be received for 3 months. So we will have to pass interest entry also. Is it right? So are we ready to solve? Say yes or no. Then we will start. Everybody together. Yes. Draw the format. Draw the format. Please draw the format. Books of T Limited. Books of TEE, T Limited. Investment account. This investment was purchased on 1st May. So I will start from 1st May only. My accounting will start when I purchase 1st May, and the year ending date in this question is 31st December. So follow the instruction to 31st December 2011 because there is no opening balance. Security. The name of the security is 13.5% convertible debenture. Convertible debenture in D Limited. Convertible debenture in D Limited. An interest due date given in the question is 31st March and 30th September. So please keep these two dates in mind, 31st March and 30th September. They will be required for some interest calculation. And what about the face value? Now again some student will say face value is not given. But you look at the prices. At some place 107 is given, 103 is given, 106 is given. So can I assume face value is rupees 100 per debenture? Because most of the prices given in the question are hovering around rupees 100, revolving around rupees 100. So Kunal says, sir, you can take 100 rupees. That's good. Now all of you draw this format. All of you draw this investment account format. You can open your notebook fully, and on the left page you write these 6 columns, and on the right hand side page you can write this 6 column, or you can rotate your notebook and write. Is it right? Once you have completed the format, please tell me, then we'll go to working notes. Okay, so we will assume 100 rupees. Yes, Dhruv Tiwari is right. It is around 100 rupees most of the prices. So we will assume 100 rupees. Is the format done? Is the format done? Everybody, is the format done? Let us see who has done, who all have done the format. Govind Thakur has done. Kunal has done. Sakshi has done. Dhruv Tiwari has done. What about others? Kirti has also done. Yes, come on. Come on, everyone. Suyesh Watwe, done. So if you are done, then what are you waiting for? Why don't you go to working note 1, lazy fellow? Draw working note 1, purchase and sale of investment. Purchase and sale of investment. Gupta done. Chaurasia done. So draw this format. Only first step 1 draw. Purchase and sale of investment. There are 2 purchase and 1 sale transaction. Format I will keep same so that the student will get used to it. This time the interest rate is 13.5%. Date interest accrued from to number of months, then face value, x interest amount, interest at the rate of 13.5%, interest at the rate of 13.5%, come interest amount, come interest amount, come interest amount. Format is ready. Jadeja is saying format is ready. Jadeja is always ready to hit a sixer, okay? My favorite player out of all 180 players in IPL. So let us begin with this wonderful question on convertible debenture. Purchase. Look at your question. Purchase date. Purchase date is 1st May 2011. Purchase date is 1st May 2011. Interest will accrue from which date to which date? What is the interest payment date? The interest payment date is 31st March and 30th September. So up to 31st March over, interest will start accruing from 1st April 11 to 30th April 11, only 1 month. First line of the question, face value is 5 lakh. Face value is 5 lakh, and just check whether it was purchased on X interest or cum interest. Nothing is given. Nothing is given. So therefore we will take X interest. 5 lakh means 5,000 debenture, 5,000 into 105. 5,000 into 105. Kindly respond. How much is that? 5,25,000. 5,25,000. 5,25,000. And then interest at the rate of 13.5%. Yes, interest at the rate of 13.5%. Take 5 lakh into 13.5% into 1 by 12. Into 1 by 12. So the interest amount is 5625 and the total is 530625. Another purchase was 1st August. Now read the next paragraph. 1st August. Purchase 2,50,000 face value debenture. And cum interest is 107. So cum interest column 2500 into 107. 2500 into 107 is 267,500. 267,500. Interest will accrue from 1st April 11 to say 31st July 11, or you can write 1st August 11, April, May, June, July. That is 4 months. So you will calculate interest on 2,50,000 into 13.5% into 13.5% into 4 by 12. So the interest comes to 11,250. Now do reverse working and find out X interest price. 267,500 minus 11,250 is 2,56,250. 256,250. 256,250. Sale. Sale is on 1st October 2011. Interest will not accrue because interest payment date is 30th September. Face value is 2 lakh. Face value is 2 lakh. And it was sold for 103 rupees. So 2000 number into 103, that is 2,06,000. There is no interest. Interest was already collected up to 30th September. So for one day we will not calculate the interest. Is it right? Now write down step number 2. Step number 2. Interest received on investment. Interest received on investment. We have purchased investment on 1st of May. After 1st of May, the interest due date will be 30th September 11. The interest due date will be 30th September 11. Come on. 6 months. Interest will be calculated for 6 months because company will pay interest for 6 months to those debenture holder who hold the shares on 30th September. So here you can make a mistake. Some of you will count from 1st May. The answer is no. You have already paid interest for 1 month here on the screen at the top to the seller. From the company, you will get interest for 6 months. So face value on 30th September we have this 5 lakh, and we have also bought this 2,50,000. So total face value of debenture which I am holding is 5 lakh plus 2,50,000. So investor is holding 7,50,000. Investor is holding 7,50,000. So kindly tell me, on 7,50,000 at 13.5% for 6 months. Please answer. Please answer. 7,50,000 into 13.5% divided by 2, 50625. 50625. 50625. And you will also receive interest on 31st December 11 on converted debenture. You will receive interest on 31/12/2011 on converted debenture. We had discussed, while reading the problem, we have discussed that debenture will be converted, will be 1100 debenture. Face value of those converted debenture will be 1100 into 100, 1,10,000. On 1,10,000, on 1,10,000 into 13.5% divided by 4, divided by 4. So you will get something around 371, let us say round off 3713. 3 months only. On this debenture, 3 months only. On this debenture, 3 months only. Right? So these are the interest received. These are the interest received. Let us now calculate interest accrued. Step number 3, interest accrued on investment. Draw the table, due date, number of months, face value, interest at the rate of 13.5%. Interest at the rate of 13.5%. Our year ending date is 31st December 2011. Interest will accrue for 3 months, October to December. October to December, 3 months, October, November, December. Up to September, interest has been received. Now, what is the amount on which you will receive or calculate interest? Understand, on the screen you will pay attention. We have purchased 5 lakh rupees here plus 2,50,000 minus sold 2 lakh, minus sold 2 lakh, and minus converted 1,10,000. So you will write like this: face value 5 lakh plus 2.5 lakh minus 2 lakh minus 1.1 lakh. So that is equal to 4 lakh 40,000. That is equal to 4 lakh 40,000. That is equal to 4 lakh 40,000. Multiply 13.5%. 4 lakh 40,000 into 13.5% divided by 4. So this comes to 14850. Check. 14850. This comes to 14850. Okay. 14850 is right. Step number 4, right. Step number 4, cost of converted debenture. Average cost of converted debenture. Average cost of converted debenture is equal to average cost of converted debenture equal to, so average rate is equal to opening investment value plus value of investment purchased upon opening quantity plus purchased quantity plus purchased quantity opening investment value. Opening investment value, we will take this figure 5,25,000. 5,25,000 we already had, plus you purchased this one 256 250 divided by opening quantity 5,000 plus new quantity purchased 2500. So now you have to take the calculator and add first 5,25,000 plus 256 250 divided by 7500. So this comes to 104.1667. 104.1667. 104.1667. Step number 5, value of converted debentures, or you can say cost of converted debenture. Cost of converted debentures. Cost of converted debenture, right hand side rupees. A, number of debentures converted into shares. Before the conversion, we were holding 5,50,000 rupees value, which means 5,500 debenture. How this 5,500 has come on the screen, and follow me, this red font. You have 5,000 purchased, 2,500 purchased, and 2,000 sold. Before conversion, we had 5,500 debenture, and out of that 20% will be converted. So that I will take 1,100 debenture. Point B, average cost per debenture. Average cost per debenture in bracket from step 4, 104.1667. So therefore cost of converted debentures. Therefore cost of converted debenture, A multiplied by B. A multiplied by B. So let me also try 1,100 into 104.1667, and that is 114,583. Round off 583. Point you can ignore. Just check the answer, 114,583. So step number 5 is cost of converted debenture. Step number 5 is cost of converted debenture. Up to this, everybody has done? Say yes. Now the next part is valuation. Step number 6, write down value of closing investment in debenture. Value of closing investment in debentures. First point A, cost. Cost basis is average cost method. Basis is average cost method. Cost is equal to number of debentures held on 31st December 11 multiplied by average cost per debenture multiplied by average cost per debenture multiplied by average cost per debenture. So number of debenture held is 4,400, already calculated. You can see I'm going to the previous page. On the screen at the top is 4,40,000 rupees divided by 100 will give you 4400, and the average cost is 104.1667. So please calculate and give me the answer. 104.1667 into 4400. So this comes to 4,58,333. And point B, write down market value. Market value will be 4,400 into what is the market value of debenture in the last three lines? 106. So you will take 4400 into 106. 466,400. 466,400. Everybody is right. 466,400. Therefore, point C, investment will be valued at lower of the two, that is 458,333. 458,333. Investment will be valued at 458,333. Step number 7, value of closing investment in equity shares. Oh, we have got equity shares also. Closing investment in equity shares in D Limited. Value of closing investment in equity shares in D Limited. So first point A, cost. Cost we have calculated in step number 5. 114,583. 114,583. Cost is 114,583 for equity share, and market value how many equity shares were issued? Go to your question. In the question last 3 or 4 lines, I will show you on the screen. I will show you. Just pay attention on the screen. I am going to highlight something. 10,000 equity shares in D Limited were issued. Can you see this 10,000 equity share? So I will multiply 10,000 equity share into market price 15 rupees. Into market price 15 rupees. So the answer is 10,000 into 50. That is 1,50,000. Therefore, again write down investment will be valued at lower of the two, that is rupees 114,583. That is 114,583. So we have now completed all working notes. So are you ready to solve this question now? Are you ready to solve? Yes. So you will give me the answer and then I can finish fast. Okay. So I will require these numbers. Well, we will be solving investment in debenture, investment in equity share, converted value, okay, interest accrued, interest received, purchase and sale. So all of you will help me now. You help me today. Tomorrow God will help you. Okay, and day after tomorrow, one more God will help you. Institute. So those who help their teacher, God helps them. So we are going to start from 1st May. There is no opening balance. There is no opening balance. Directly purchase entry to bank. To bank. First line of the question, 5 lakh. Face value, 5,000 rupees number. The amount was, the amount of purchase on the screen is 5,25,000 and 5,625 interest paid. 5,25,000, 5,625 interest paid. Then there is one more purchase on 1st August. 1st August. 1st August 2011. Write down to bank. 1st August 2011. 1st August 2011 to bank 2,50,000 2500. What was the X interest amount? 256,250. 256,250. In bracket write working note 1. Working note 1. And how much was the interest? 11,250. 11,250. Now write down by interest September 30 by bank interest received. Go to working note 2. Here 50625 you will find. 50625. Working note 2. Below working note 2 is right. Working note 2. Then there is a sale entry on October 1st by bank sale. Working note 1. You have sold investment of 2 lakh face value. 2,000 is the quantity, and on the screen if you see 2,06,000 is the X interest amount realized. 2,06,000 and then dash. then dash. We have to also prepare one working note on profit or loss on sale. Is it right? We have to prepare one working note on profit or loss on sale. So please write down one working note number 8 or step 8, working note 8. Profit or loss on sale of investment. Profit or loss on sale of investment. Profit or loss on sale of investment is equal to sale value minus cost. Is sale value minus cost. Sale value is 2,06,000 and cost will be 2,000 quantity sold. 2,000 quantity sold, and you see on the screen the average cost is 104.1667. So multiply by 104.1667. So some of you will have to give me the final verdict. 2000 into 104.1667. That is your uh, total cost. Sale value is 2,06,000. Oh, there is a loss. There is a loss. 2333 loss. Rupees 2333 loss. Rupees 2333 loss. Is the answer right? Rupees 2333 loss. Is the answer right? 2333 loss. Okay. So now you come back to your investment account and on the same date write down October 1 by P&L account, working note 8, loss on sale. In amount column 2333. In amount column 2333. Okay. So this completes our entry related to sale. Now all entry on December 31st. All entries on December 31st. So first I will pass an entry for converting investment in debenture into investment in shares. Entry will be investment in share account debit to investment in debenture. We are in investment in debenture account. So I will write by investment in shares. By investment in share, 1100 debenture were converted. So you will write 1,10,000 face value. 1,10,000 face value. 1100 is the quantity and we have done the calculation of the cost. I will take you to working note number 5 below. 1,14,583. 1,14,583. Here you can write working note 5. And on the same date, by bank, interest received on converted debenture. Interest received on converted debenture. Interest received on converted debenture. For that you have to go to working note 2 on the screen below. 3713. I have written here interest received on converted debenture. 3713. So you will write in interest column 3713 working note 2. Working note 2, and on December 31st we have to also write by interest accrued. By interest accrued, by interest accrued, working note 3. So please go to working note 3 on the screen at the top, interest accrued 14850. 14850. 14850. On December 31st, you have by balance carried down also. By balance carried down, face value total is 7,50,000 here, minus 2 lakh minus 1 lakh 10,000, 4 lakh 40,000. Number is 4, sorry, here 4 lakh 40,000 here, 4 lakh 40,000 face value, 4400 quantity. Wait a minute. And now what about the closing investment value? On the screen, working note 6, this 458333, this 458333 is your closing investment value. 458333. And only one more thing is pending. On the debit side, 31st December 11 to P&L account, this interest amount you will transfer to P&L account. Student will take total of the credit side 50625 plus 3713 plus 14850 minus 5625 minus 11250. So the answer is, somebody rightly answered, 52313. 52313. Now please check whether amount is also tallying or not. Amount column is on the debit side 5,25,000 plus 262,500. Sorry, 256,250. 256,250. And that is equal to 781,250. Check credit side whether amount is tallying or not. On the credit side, amount column tally. So yes, it is tallying. 1 rupee difference. So you can make closing investment 4 rupees here. Then it will tally. 781. Closing investment working note number also mentioned. Closing investment working note number was 6. Working note number 6. It is tallying. 781 250. Thanga Lakshmi Surya, right. $458 334. 458 334 is the closing stock. Now we'll do one more thing. We'll prepare investment in equity share account also. This is over. This investment in debenture is over. We will prepare one investment in equity share account also. So write down one small account you prepare. Investment in equity shares in D Limited. At the end of the answer, if you want, you can prepare In some exams, they ask you to prepare both. In some exam, they don't ask you to prepare both. So here my entry will be here. Investment in equity share in delimited account debit. The date is 31st December 11. To investment in, this is the contra entry. To investment in 13.5% debenture in delimited. One account is debited, one account is credited, and the amount was 114,583. The amount was 114,583. Is it right? That was your step number 5. And then 31/12/11, buy balance carried down 114,583. You will see on the screen step number 7. We have decided to value investment in equity share at lower of cost or market value. Take total of both sides and tally. Take total of both sides and tally. This is the answer. One assumption we have to write. Assumption write down. It is assumed that investment purchased on 1st May 2011 was at X interest price. It is assumed that investment purchased on 1st May 2011 was at X interest price. Was at X interest price. Was at X interest price. Investment received purchased on 1st May 2011. 1st May 2011 was at X interest price. Was at X interest price. Come on, is it right? This answer is over. This answer is over. One more question I will give you for writing. Those who have done, please write down one question. Without delay, write down one question which is very to the power 3, very to the power 3 important for your next exam. Please write down, this question was asked in May 2019 RTP, April 2021 MTP for 10 marks. Oh my god, 10 marks is in your hand now. So kindly come to question, write down. Please write down the question. A Limited purchased on 1st April. A Limited purchased on 1st April. Little fast. A Limited purchased on 1st April 2018. 8% convertible debenture. 8% convertible debenture in C Limited. Of face value of rupees 2 lakh. Of face value of rupees 2 lakh. Of face value of rupees 2 lakh at rupees 108. At rupees 108. On 1st July 2018, On 1st July 2018, A Limited purchased another 1 lakh rupees debenture, another rupees 1 lakh debenture at rupees 112 cum interest, another rupees 1 lakh debenture at rupees 112 cum interest. Next line right, on 1st October 18, rupees 80,000 debenture, was sold at rupees 105, at rupees 105. On 1st December 2018, C Limited give option, C Limited gives option, C Limited gives option for conversion of, C Limited gives option for conversion of 8% convertible debentures, 8% convertible debentures into equity shares, of rupees 10 each, into equity shares of rupees 10 each. A Limited receive 5,000 equity shares in C Limited. A Limited receive 5,000 equity share in C Limited in conversion of 25% debenture held on that date. In conversion of 25% debenture held on that date, the market price of debenture, and equity share in C Limited at the end of year 2018, is rupees 110 and rupees 15 respectively. Interest on debenture is payable each year. On 31st March and 30th September. On 31st March and 30th September. The counting year of A Limited is calendar year. The counting year of A Limited is calendar year. Underline calendar year. Prepare investment account in the books of A Limited on average cost basis. A Limited on average cost basis. Okay. So that was this simple question. You will find it is almost like your previous question. So I will read the question again. A Limited purchased on 1st April 2018. So this is again a purchase problem. No opening balance. So no question of interest accrued also at the beginning. Okay. On 1st April 2018. 8%, interest rate is 8%, convertible debenture of face value of 2 lakh at rupees 108. but it is not given whether it is X interest or cum interest. So tell me, dear student, what will you assume? Will you assume it as X interest or will you assume it as cum interest? Will you assume it as X interest or will you assume it as cum interest? Answer little fast. Answer whether you will assume X interest or cum interest. So most of the students are saying X interest. Now look at the last three line on the screen. Interest payment date is 31st March and 30th September and you are purchasing on 1st April. So the answer is it does not matter. Neither X interest nor cum interest because there is no interest accrued. Hello, there is no interest accrued. There is no interest accrued. Last interest is paid up to 31st March. You are purchasing on 1st April. Where is the interest accrued? Doesn't matter. Okay. So you were out clean bold. It does not matter. Previous question was 1st May. This is 1st April. Okay. Then on 1st July, one more lot was purchased. This time they mentioned cum interest. On 1st October, there is a sale. Tell me, again, please tell me whether this is at X interest price or cum interest price. Little fast. Come on, say X interest. Let me see who will get it right. Or it does not matter. Option 3, no interest accrued. So if there is no interest accrued, it does not matter because the interest payment date is 30th September and this transaction is happening on 1st October. So there is no gap. If there is no gap, no interest accrued. So again, they have correctly not given the interest accrued here. Then on 1st December 18, C Limited gave an option for conversion into equity share. A Limited received 5,000 share in B Limited in conversion of 25% debenture held on that day. So let us check how many debenture will be converted into share. Face value is not given. Can we assume 100 rupees? Yes, can we assume 100 rupees? The answer is yes because the prices that are given to you is 105, 108, 112. So that is revolving around 100 rupees. So I can assume face value is 100. So let me check how many debentures will be converted into shares. So you had purchased first debenture of 2 lakh rupees, 2000 debenture. Then you purchased another debenture 1 lakh rupees, 1000. And you sold 80,000 debenture, rupees 80,000. So that is 800. So you have 3 minus 8. How much is that? 2,200 debenture you are holding into 25%, that is 550 debentures will be converted into 5,000 equity shares. 550 debenture will be converted into 5,000 equity share. And how many debenture will be left with this investor? 2200 minus 550. 2200 minus 550. So what is the debenture which is left with this investor? Is 1650. 1650. 1650 will be left with this this investor. Okay. Market price is given to you that we will require for applying cost or market value, whichever is lower. Interest due dates are 31st March and 30th September. Then year ending date is 31st December, calendar year. 31st December is the year ending date, and you have to prepare investment account. Basis of calculating cost will be average cost. Basis of calculating cost will be average cost. Okay. So what we will do, first we will prepare the working notes. This time I'll prepare first. Okay. Do you mind if I prepare working notes first? Do you mind? We'll prepare the ledger at the end. It's okay. Either ledger first followed by working notes, or you can simply say step 1, 2, 3, 4, 5, and then ledger you can prepare at the end. So please write down, everybody, keeping this question in front of you, which you have written. Step 1, purchase and sale of investment. Purchase and sale of investment. Format is same. I am not changing the format so that the student can understand better. First you write down purchase and sale of investment, format, date, interest accrued, 3 columns, from to number of months. Then you write down face value, then you write down X interest, and then you write down interest. At the rate of 8%, interest at the rate of 8%. Come interest, and then you draw the columns. Because once you draw the columns, easy for you to write. So write down first purchase 1,418. Interest will not accrue because interest payment date is 31st March. Face value is 2 lakh. It was purchased for 108 rupees. So you will write here 2000 into 108. 2,16,000. One more purchase was made on 1,718. The amount is 1 lakh rupees. Face value is 1 lakh. Interest will accrue from 1st April to 1st July 18. April, May, June, 3 months. 3 months. And this was purchased at 112 rupees come interest. 112 come interest will be on the screen, come interest column, 1000 into 112. In the come interest column, write 1,12,000. In the come interest column, 1,12,000. But now you have to calculate interest on 1 lakh at 8% for 3 months. 1 lakh into 8% into 3 by 12. That interest amount is 2,000 rupees. Move backward here. 1,12,000 minus 2,000. so that your X interest amount will be 1,10,000. Okay, there is one sale transaction also on 1st October 2018. Face value 80,000 was sold. Here interest accrued will be nil because last interest payment date is 30th September. So no interest accrued. But look at the price. It was sold at 105 rupees. 105. 800 into 105. 84,000 dash 84,000. 84,000. Up to this you have done? Say yes, we have done. Now write down step number 2. Interest received on investment. Interest received on investment. So first we will write here 30th September 2018. Interest will be received from the company for 6 months. And what is the face value held on this date? On the screen, the face value is 1st April you purchased 2 lakh. 1st July you purchased 1 lakh. So this is 3 lakh rupees you were holding. You can just add here 2 lakh plus 1 lakh. 3 lakh. 3 lakh into 8% into 6 by 12. 3 lakh into 8% into 6 by 12 is 12,000. And then you have received interest on conversion date also. Question book. In your question you see I have given you the question on 1st December 18. You will receive interest on converted debenture. You will receive interest on converted debentures. You will receive interest on converted debenture for how many months? September is over, October and November, because it is beginning December, so 2 months. Why 2 months? Write down October to November. December you will not get interest. And what was the face value of investment which got converted? 2 lakh plus 1 lakh minus 80,000 into 25%. Into 25%. 2 lakh plus 1 lakh minus 80,000 into 25%. So let me try how much is that. Is it 55,000? 55,000. On 55,000 at 8% for 2 months. So try your calculator. 55,000 is the face value of debenture which got converted. So you are getting something like 733. Is right, 733. This is the interest received on 2 months for the debentures which were converted into equity share, because now they are no longer debenture. So they will say, please give me interest for 2 months for which it was outstanding as a debenture. 733 is right. Okay, 733 is right. Now we'll go to next working note. Number 3, interest accrued on investment. Interest accrued on investment. The due date is, or the date write down, you can just write date 31st December 18. 31st December 18. 31st December 18. What is the value of debenture left with us? Interest will accrue for 3 months. What is the value of debenture left with us on the screen? 2 lakh plus 1 lakh minus 80,000 and minus 55,000. Minus 55,000. So you are left with 1,65,000 rupees face value. 2 lakh plus 1 lakh minus 80,000 sold and minus 55,000 converted. So now we have 1,65,000 at 8% for 3 months. At 8% for 3 months. How much is that? How much is that? 1,65,000 into 8% for 3 months. So that is 3,300. That is 3,300. Up to this is right now? Yes. Kunal is right. Sakshi right. Thanga Lakshmi Surya right. Next step number 4, write down cost of converted debenture. Cost of converted debenture. So first we'll calculate average cost per debenture. Opening investment value plus purchased investment value divided by opening quantity plus purchase quantity. Opening quantity plus purchase quantity. Opening investment value on the screen, this figure, X interest amount 2,16,000 and plus 1,10,000 purchased value. 2,16,000 plus 1,10,000, and this you divide by 2,000 plus 1,000 purchase quantity. So kindly solve. How much you are getting? 108.6667. 108.6667. 108.6667. Therefore, cost of converted debentures, 550 debentures were converted. 550 debentures multiplied by 108.6667. 550 into 108.6667. Come on. 508 into 108.6667. So this is the cost of converted debenture. Come on, answer. 59767. 59767. Okay. Step number 5, write down. Profit or loss on sale of investment. Profit or loss on sale of investment. So 59767 is right. Most of you are getting it. Very good. Profit or loss on sale of investment is sale value less cost. This is profit. sale value less cost. Sale value will be this amount, 84,000, and cost will be how many units we have sold on the screen. 800 quantity we have sold. 80,000 rupees face value is equal to 800, and the cost per unit is 108.6667. So please do the final calculation and tell me the final figure of profit or loss is, this is 84,000, this is 86,933, and that is equal to a loss of 2933 loss. 2933 loss. 2933 loss. 2933 loss. 2934 also you can write. 33 or 34 is okay. 33 or 34 is okay. Next working note, write down value of closing investment in debenture. Step number 6, write down. Step number 6. Step number 6. Value of closing investment in debenture. Value of closing investment in debenture. First write down A, cost. The basis is average cost method. So cost is equal to number of debentures held into average cost per debenture. Number of debenture held will be, initially you have purchased 2000 plus you purchased 1000 minus you sold 800 and minus 550 got converted. So remaining amount is investment held. Remaining amount is investment held. And then the cost is 108.6667. So when you multiply, you'll get 1650 into 108.6667. This is your cost. 1650 into 108.6667. So that multiply, you'll get 1,79,300. 179,300. 179,300 is right. And what is market value? We have 1650 debentures. Go to question. Market price of debenture is 110 rupees. Market value is 110. So that is 1650 into 110. 181,500. Therefore, investment will be valued at lower of the two, that is rupees 179,300. That is 179,300. Yes, Kunal is right. Now write down step number 8 or 7, write down value of closing investment in shares. Value of closing investment in shares of C Limited. Value of closing investment in shares of C Limited. Write down neatly. And that is equal to, first we'll write down point A. Point A, cost. Cost we have calculated in the previous step. Step number 4 here. Can you see 59767? Step 4, 59767. And point number B, write down market value. You will go to the question. In the question you will find that you have purchased, you have received 5,000 equity share. If you look at the question, after converging you are holding 5,000 equity shares into market price is rupees 15. So that means the value of this investment, is 75,000. So therefore point number C, therefore investment will be valued at, at 59767, in bracket being lower of A and B, So this is my working note on closing investment value in shares of C Limited. Any query till now? Yes. So now we have to prepare investment account. Is it right? Now we have to prepare investment account. So let me use the format of previous answer so that it will save time for me. So dear student, please write down books of A Limited, investment account for the period from 1st April 18. In this example, the year ending date is December 18. Name of the security, this is 8% debenture in C Limited. Interest due dates are 31st March and 30th September. Face value rupees 100 each. Now what you do, draw the format. We will write the answer in our format so that you will practice nicely. All these questions are important. If you try on your own, sometimes you can go wrong. So is the format ready? Everybody, is the format ready? Tell me, then I will finish it. Working notes have already been prepared. Is the format ready? Yes or no? Format is ready now. Most of the students have said that the format is ready. So start. Keep the question in front of you and you will understand. 1st April 18. You will give me answer first. To bank. Face value was 2 lakh. Number is 2000. And the amount paid was 2,16,000. In bracket step 1. And there was no interest accrued. And there was no interest accrued. Then there is one more purchased on 1st of July 18. 1st July 18 to bank purchase working note 1. You have purchased investment of 1 lakh face value, quantity 1000, and it was purchased for, go to working note 1, check the X interest amount. Check the X interest amount. This X interest amount was, I have to go a lot behind, so you have to answer only. Yes, 1,10,000. X interest amount. And interest amount was 2000. And interest amount was 2000. Do you agree? Say yes. We agree. Purchase, any query on purchase? Credit side will go. First you will write entry for interest received on 30th September 18. Go to your working note 2. Working note 2, please tell me what is interest received on 30th September. Come on, interest received on 30th September, step 2. Step 2. 12,000 rupees is right. 12,000 rupees. And then what happened on 1st October? What happened on 1st October 18? What happened on 1st October 18? There was a sale. There was a sale transaction. So buy bank, sale, working note 1, working note 1. The face value of investment sold is 80,000, quantity is 800, and the amount was 84,000. Interest was not there. And on the same date, 1/10/18, by P&L account, loss on sale, loss on sale, correct, 84,000, Govind Thakur is right. So can you tell me what was the loss on sale? Check your working note on loss on sale. Can you find loss on sale 2933 in your working notes? Loss on sale 2933. Everybody, loss on sale 2933. Then what happened on 1/12/18? What happened on 1/12/18? Kunal is right. Thanga Lakshmi Surya right. Sakshi is right. Dhruv Tiwari is right. Chaurasia right. Prithvi Neelam right. 1/12/18, we have converted debentures into equity share. So you will write here buy investment in equity shares. And we have converted debenture of face value 55,000, quantity wise 550, and the amount we have calculated in one working note. What was the cost of converted debenture? Check and tell me. Yes, come on. Cost of converted debenture. Working note 5, step 5 you see. Step 5, Kunal, step 5. Cost of converted debenture 59767. Check. You're right, 59767. And on 1/12/18, by bank also you will write. Step 2, interest received on converted debenture. Step 2, go to step 2. Anybody, interest received on converted debenture? 733 is right. Madhu is right. 733. Step number 2, interest received on converted debenture. Now we'll go to 31st December 18. By interest accrued. Step 3. Go and check step 3. Interest accrued for 3 months. Interest accrued for 3 months. Anybody? Interest accrued for 3 months. Interest accrued for 3 months. Yes, come on. 3,300. 3,300 is right. 3,300 is right. And one more line. 31/12/18. By balance carried down. By balance carried down. So first you take face value total. 3 lakh minus 80,000 minus 55,000. So balance carried down will be 1,65,000. Quantity 16,500, 1650. And this amount we have calculated in one working note. Closing investment value we have calculated 179,300. 179,300. Check the working note. Step number 6. Step number 6. And now one last thing you have to do is on the debit side 31/12/18 to P&L account, interest transferred to P&L account. So tell me the balance of interest account. Take 12,000 plus 733 plus 3300 minus 2,000. Minus 2,000. So how much interest will you transfer to? How much interest will you transfer to P&L account? Anybody? Interest 14033. 14033. Thanga Lakshmi Sanket. Right here 14033. Okay, so now you take the total of amount column. Please tell me total of amount column. We have to check that amount column is tallying or not. We have to check amount column is tallying or not. So 3,26,000. Credit side also let me check. Is it matching 84,000 plus 2,933 plus 5,9767 and plus 1,79300? So that is equal to 3,26,000. So this way you will close the debenture investment account. Answer is not over. Answer is not over. Something is pending. Please tell me what is pending. What is pending? Anybody, what is pending? You have to prepare one investment in equity shares in C Limited account. Okay. So we will prepare one investment in equity shares in C Limited account. investment in equity shares. This is just a small account of 2-3 lines only. So here I am not going to do much presentation. Just draw the normal format. Date, particulars, rupees. Date, particulars, rupees. Jadeja is right. Thakur right. Tiwari right. Pawar right. Surya right. All players are there today. Surya Kumar, Jadeja, Thakur, Pawar. So you will write down 1st December 18 to investment in to investment in to investment in 8% debentures in C Limited. So you have to go and check what was the cost. On the screen you see 59767. 59767. And 31st December 18, buy balance carried down. Again we'll have to go and check the last step which we have prepared. On the screen below, 59767 is the value of closing investment in share because it is below the market value. So 59767 by balance carried down. No further action required. This answer is over. Now this answer is over. Now we can say yes, this answer is over. These are some questions on debentures and bonds. Last about 2 days and some portion of today, we have invested in understanding accounting treatment of investment in debenture, and we have also taken convertible debentures. Okay, so now we are going to discuss the investment in shares. Investment in shares. Okay, so now we'll take a investment in shares. Come to your book and you will find there is a paragraph 16, special points relating to shares. What is the difference between investment in debenture and investment in share? What is the main difference between investment in debenture and investment in shares? In case of debenture, interest rate is fixed. In case of investment in equity share, interest rate is not fixed. In case of investment in debenture, interest are paid on fixed dates. Whereas in case of investment in equity shares, interest are not paid, dividend is not paid on fixed date. In fact, company may or may not pay the dividend also. Interest payment is obligatory, but dividend payment is not obligatory. Board may decide whether to pay dividend or not. And what about the market values? Market value of equity share fluctuate a lot. Market value of equity share can be 200 rupees. After 6 months, it will become 2000 rupees also. And reverse can also happen. Share price may be 2000 and then it may go down to 200 rupees, 300 rupees. So you are right. Sanket Jain is saying return is not fixed in equity share. Yes, you are right. One Jangish Raman is saying interest is received on debenture, dividend is received on shares. Amazing. You are genius. I never knew this. Okay. And then there is no accrual concept in case of dividend. You are right. At the end of the year, we will not pass entry for dividend accrued. Of course, if the dividend has been declared, if the dividend has been declared by the board or by the shareholder, then we can recognize in dividend income also. Then we can recognize dividend income also. We will see when to recognize dividend income. On equity share, company pays bonus share. Company also issues right shares on equity shares. Usually you don't get bonus share or right share in case of debenture. So the adjustment of bonus share will also come. Right share will also come, but this time from the point of view of investor. Maybe you have studied in earlier chapter bonus share, right share, but that was from company's point of view. The company which was issuing bonus share and right share. Now we'll look at from this angle. Okay. Investor is receiving now bonus share, right share, and how he is going to do the accounting for the same. So that is my theme, and this is going to be even more interesting than the debenture. So let us understand first certain special points relating to shares. First is about accrued dividend. Accrued dividend. There is no fixed dividend. No fixed dividend. No fixed dividend on equity shares. No fixed dividend payment date on equity share. No fixed dividend payment date on equity shares. So not unlike debenture, not like debenture, not like debenture. We are going to only provide for dividend when the dividend has been properly declared and sanctioned in the annual general meeting. Accrual of dividend cannot be considered like fixed interest bearing security. In last 7 or 8 questions that we have solved, we have passed entry for interest accrued. Not now, only if it is declared and sanctioned in the annual general meeting, AGM, annual general meeting, or but not released before the year ending date. This is based on concept of prudence. So this is based on concept of prudence. Only when the dividend is declared in the annual general meeting, dividend received by the investor will normally be treated as income and will be shown as income in the income column in investment account. So when we are going to prepare investment in equity share account, we will draw two columns, one amount column and one income column. Instead of writing interest column, this time we will draw income, not interest, because we don't receive interest on share. We receive dividend. Hence, we will call it income column. Accounting entry. Bank account debit to dividend income account. This is normally the entry we will pass for dividend income on equity share, and dividend income is transferred to profit and loss account. Dividend income is transferred to P&L account because it is your income on investment. However, there is a very important sentence now, very important. I will have to highlight it to show the importance. But in case dividend has been received for pre-acquisition period, such dividend will be treated as capital receipt and credited in investment account. Consequently, the cost of investment will be reduced. Consequently, the cost of investment will be reduced. Bank account debit to investment in equity share. Now, this is a new point for you. A plain reading will not help you. New point. Maybe before today you have never heard about it. Maybe. What is this issue? Suppose Kunal purchase shares. Kunal purchased shares on 1st May 2021. Kunal purchased shares on 1st May 2021. And then Kunal was holding the shares. Then on 1st September 2021, AGM approved the dividend. AGM approved dividend. Now this dividend is for which year? This dividend is for year ended 31st March 2021. Dividend is for year ended. Dividend is for year ended 31st March 2021. This basic knowledge you should have. Once the year is over, then company will have board meeting. After some time, company will have general meeting. In that general meeting, they will approve the dividend which is proposed by the board for the year ended 31st March 2021. So dividend will be paid out of the profits of the company. Dividend will be paid out of the profits of company earned between 2020 to 2021, because this is the financial year 2021. This is my left hand 2021. This is the year out of which dividend is paid to the shareholder. Year will end on 31st March 21. For some days accounting work will be completed. Then board will propose a dividend. Then shareholder will approve the dividend on 1st September. Dividend is paid out of the profit earned for year ended 31st March 2021. Dividend will be paid out of the profit earned for 31st March 2021. Okay. But Mr. Kunal have purchased the share on 1st May 2021. Oh my God. Dividend is paid for which year? 2021. Financial year 2021. Mr. Kunal has purchased the share on 1/5/2021. Mr. Kunal has purchased share from whom? He has purchased share from Aniket. He has purchased share from one Mr. Aniket. Okay. My question to this batch of highly talented and genius students is, when the company will declare dividend on 1st September, who will receive dividend? Who will receive dividend? The previous shareholder? Who was previous shareholder? Aniket? Or the current shareholder? Kunal. Kunal was holding shares from 1st May onward. Aniket was holding share up to this whole period from 1st April 2020 till he sold it to Kunal on 1st May 2021, which means on the balance sheet date of 31st March, it was Aniket who is holding the share. But when the AGM declared the dividend, it is Kunal who is holding the share. So now I can understand there are two answers coming. Okay. Some students are saying Kunal will receive dividend. Some students are saying Aniket will receive dividend. So let us have a poll. Vote for Aniket. Vote for Aniket. Okay, let us vote for Kunal. Vote for Kunal. Who will receive dividend from the company on 1st September? Almost 50-50. Country is divided into two parts. 50% in favor of Aniket and 50% are in favor of Kunal. So the answer is simple. Who is the shareholder now? Kunal is the shareholder. Kunal is the shareholder. Like in debenture holder, company prepares a list of shareholder on a record date. All of you should know this. Your law teacher will explain better. Company prepares a list of shareholder on a record date. Company prepares a list of shareholder on record date. So record date is fixed by the company some days before the AGM. Let us say company fixes the record date 14 days before the AGM. On record date, whose name will appear? Of course, Kunal's name will appear because Kunal is shareholder now. Company will not go and check who was the shareholder on 31st March 2020 or 21. Company will see who is the shareholder on the record date. Record date is generally few days before the AGM. So they'll prepare a list of the shareholder and they'll find that Kunal's name is appearing. So Kunal will get the dividend. Then you will say Aniket will suffer a loss. You are right. But normally what happens, if the company is going to declare dividend, the market price of the share is already high. So of course Aniket has already recovered the value of dividend while selling shares to Kunal. So Aniket is also not losing because the moment shares are declared and paid by the company, the prices usually falls because to that extent the company's assets have been distributed. Okay, so company will pay dividend to that person whose name appears in the register of member on the record date. Now Kunal will be dancing, okay, like this. Oh, I was not a shareholder on 31st March 21 and still I received the dividend. Kunal will dance. Okay. So our standard says when Kunal purchased the shares on 1st May, Aniket must have charged him some amount for the dividend that Aniket is going to lose. And when Kunal received the dividend for the previous year, 31st March 21, it is just a recovery of the cost. What is that? It is just a recovery of the cost. So the standard says, now pay attention, I have explained for 15 minutes now. When an investor receives dividend for that period, when he was not a shareholder, it is like a capital receipt. It is like recovery of your cost. It is not income and therefore credit it to investment account. Therefore credit it to investment account and this is called dividend out of pre-acquisition period profit. So what we will call it? We will call it dividend out of pre-acquisition profit. So this is like some extra benefit Kunal got. So such dividend will be credited to investment account. When we credit the dividend to investment account, the investment balance will reduce. The cost of investment will reduce. It is called recovery of your cost. It is also called recovery of your cost. also called recovery of cost. Also called recovery of cost. Is it right? So investment will be credited. So what the student should do? The student will have to see source of dividend. If source of dividend is pre-acquisition profit, then credit investment account. If source of dividend is post-acquisition profit, then credit P&L account. Then credit P&L account. If it is pre-acquisition profit, it is like a capital receipt. It is not normal income. It is like a capital receipt. So therefore, these 2 points we will keep in mind while solving the question. These 2 points will keep in mind while solving the question. Okay. So this is about dividend. Entries will be, if it is out of pre-acquisition profit, bank to investment. If it is out of post-acquisition profit, bank to P&L account. Right. And while solving the question, we will further discuss. One student is asking, are we supposed to make so many working notes and notes? Yes, the answer is yes, because this is professional exam. For every calculation, you have to show the working. If you try shortcut, institute will also give you shortcut only marks. So suppose they have to give 10, they will use shortcut and they will remove this 0, only 1. So don't try shortcut. Okay. If somebody tells you shortcut, then you give him one big boxing, so that for next 3 years he will not tell you, and by that time you will become CA. So let us come to bonus share. This is not BCom or MCom exam. Those who are under that misconception, you may be a merit holder in 11th board, 12th board, even foundation. CA intermediate board does not respect you what you have done in the past. It will respect you only what you do now. Okay. So those who are believing that we can pass by some kind of shortcut in the intermediate exam, you are sadly mistaken. Bonus shares. Bonus share. What about bonus share? You are a shareholder. Kunal is holding 100 shares of MRF Tires Limited, purchased at a price of rupees 90,000 per share. Oh my God, what a rich man. Kunal is holding 100 shares of MRF Tires Limited, purchased at a price of rupees 90,000 per share. MRF issued bonus shares. MRF issued bonus shares in the ratio of 1:1. In the ratio of 1:1. In the ratio of 1:1. Okay. In the ratio of 1:1. What is the average cost per share? Write down the question first. After bonus issue, what is the average cost per share after bonus issue? So I'll repeat the question. What is the average cost per share after bonus issue. Kunal is holding 100 shares of MRF Tires Limited, purchased at a price of rupees 90,000 per share. Purchased at a price of rupees 90,000 per share. MRF Limited issued bonus share in the ratio of 1:1. MRF issued bonus share in the ratio of 1:1. Okay, what is the average cost per share after bonus issue? What is the average cost per share after the bonus issue? So let us solve together. First is original shares. Original shares cost will be 100 into 90,000 is, I think, 90 lakhs. Oh my god, Kunal is holding shares of 90 lakh. Add bonus share. He has received bonus share. Cost of bonus share is 0. Shareholder does not pay anything. Cost of bonus share is 0. So the total cost is 90 lakh. The total cost is 90 lakh. Total number of shares after bonus issue, 100 plus 100. 100 original, 100 bonus. 100 original, 100 bonus, 200. So therefore average cost 90 lakh divided by 200, it will become rupees 45,000. 90 lakh divided by 200, it will become 45,000. After the bonus shares are issued, the average cost goes down because company's number of share only increases. You can see in this example also, your number of shares has increased, but total cost has not changed. So average cost per share will fall. Okay. So bonus share is a capitalization of reserve. Additional cost of acquisition is not involved. It is free of cost. It is free of cost. No accounting entry for receipt of bonus share is required. So you don't have to pass journal entry, but only number of shares will increase because there is no consideration paid. There is no consideration paid except that the number of shares will increase. So what I will do, in the number column I will add bonus share, but amount column I will keep 0. So when you will prepare the investment account, number column you will write bonus share, amount column you will write 0. So what will happen to the cost per share? You see the formula here, formula of average cost per share after bonus issue. Cost of original holding, in our example 90 lakh, divided by original holding 100 in our example plus bonus share 100. So that gives me average cost per share in case of bonus shares. In case of bonus share, note, if original holding is in different lots, that is purchased on different dates, it is necessary to find out the cost for each such lot. No problem. If you have purchased different lots on different dates, find out the cost of each lot. I hope this bonus share part is clear. Now the most important discussion pending is right share. And then we can solve many questions after this. Okay. So I need to make your right share concept first clear. What is right and what is right share? What is right? Right is an option to subscribe to the right shares. Right is an option to subscribe to the right share. So, what are the three choices the investor has? What are the three choices the investor has? Come on. What are the three choices the investor has when he receives the right? One, he will exercise the right. Exercise the right means he will purchase the share, to buy the shares. Second is he can sell the rights. He may not exercise, but he may sell the right. Third is do nothing. Do nothing means let it lapse. Neither you exercise nor you sell the right. So right will lapse. Oh, it seems you have studied this before. Some of you have studied about right before. A right is not right share. A right is only an option to purchase right share by paying the subscription price. Right share requires consideration to be paid. Bonus share does not require consideration to be paid. Right share gives you a choice to purchase the share. Bonus share, there is no choice. You get the bonus share directly into your demat account. When something is coming free, why you want to exercise your choice? Take it. Take the item appearing free in your bank account or demat account. Enjoy. Okay. But for right, you have to pay. So you have to exercise a choice. When you purchase the shares, it is called right share. When you get the right from the company, it is just a right but not a right share. Right is not equal to right share. Right is an option to subscribe to right share by paying the consideration, and when you pay the subscription amount and the company allots you the shares, they are called right shares. Company offers shares first to existing shareholder. Company offers shares first to existing shareholder. This we have discussed, that when a company wants to increase the share capital, first they will ask existing shareholder to subscribe. The logic is to maintain the shareholding percentage. The logic is to maintain the shareholding percentage. That is, the one who was holding 10% share in company, after subscribing to right share, he will continue to hold 10% shares. But right shares are not free. Right shares are for consideration. The shareholders have the following choices. Either he exercise the right option, means buys the shares by paying subscription amount, and rejects the option, also called lapse. And third is renunciation of right to other person against premium. Sell the right. The right which you have, you can sell to other party. The right which you have, you can sell to other party. The reason is why rights are sold is that right shares are issued below the market price. Right shares are issued below the market price. Therefore, company or the investor who holds this right can buy the share from the company at a lower price. So therefore, this right itself acquires a value and it is sold in the market to other party who is interested in buying the shares of the company. For more details about rights and right share, kindly refer to chapter right issue. Okay. So today's topic is not how right shares value is done, how rights are valued. today's topic is accounting in the books of investor who has subscribed to the right share. The one who has subscribed or one who has sold the rights. Right shares cannot be treated as independent lot. It has to be attached with the original holding. Oh, what does it mean? It means there is some connection between original holding and the right shares. Because you are holding the shares previously, you got the rights. Okay. So what I will do, when the right shares are purchased, it is just like another purchase and you will add it to the carrying amount of the original holding. Entry. Entry is as usual. Investment in. When you purchase the right share, the accounting entry is like any other entry. Investment in shares account debit to bank. Number of right shares purchased. Number of right share purchased into subscription price. So in some question you will find the investor subscribes to all the rights. So what I have to do, first I have to see how many shares is going to purchase and multiplied by subscription price. Whatever may be the subscription price, investment account debit to bank. But now there is a problem. The investor can sell the rights. The investor can sell the rights. This is right, one separate instrument. You can sell it to others. You can sell it to others. Suppose Dhruv gets the right, then Dhruv can sell it to Sanket. Dhruv can sell it to Sanket. And then Sanket can apply to the company and Sanket will purchase the share from the company. So my question is, what is the entry for sale of rights in the books of Dhruv? That is the issue. In the books of Dhruv, the one who is holding the right, when he sells to Sanket, what entry he will pass? What entry he will pass? Come on, I am getting multiple answers. One person saying bank account debit to P&L account. The sale proceeds are usually taken to P&L account. So the entry, normally this entry will be passed. Bank account debit to P&L account. Normally this entry is passed. Sale proceeds will be taken to P&L account. Amount received will be debited to bank and it is your income. So we will credit it to P&L account. However, there is one exception. There is one exception. Exception means when it will not be taken to P&L account. When sale of right will not be taken to P&L account. When sale of rights will not be taken to profit and loss account. And this is the place where the student make mistake. So this is accident prone area. This is accident prone area. Danger, khatra. Okay. So walk carefully. So we will try to simplify it for you as much as we can. Okay. Now it says, next line. However, that means there is an exception. When will sale proceeds of right will not be taken to P&L account, exception, where the investments are acquired on come right basis. where the investment is acquired on come right basis, where the investment is acquired on underline come right basis. Come right basis means you get a share plus you also get right. You get a share and you also get a right. So when you are buying the share, let us say this black pen is my share which I am buying and this blue pen is right. So I am getting two things. I am getting two things. I am getting share also. I am getting right also. So I paid for the two things. But this right I don't want. So I sell it. This right blue pen is my right. I don't want. I sell it. So what is left with me? Only the share. Right I have sold. So my standard also says since you paid for that right at the time of purchase of this pen, when you sell it, you remove it from the total cost. You remove it from the total cost. So I paid 150 rupees for share and right. So let us say I paid 100 for this, 50 for this. So I paid 150. When I sell this right, I will credit the investment. When I purchase the share with right, I debit the investment by 150 and I sell this right for 50. I will credit the investment by 50 so that I get what is the real worth of the share. Hopefully now you understood. Same logic applies when I buy two things together, share plus right, and I remove one thing, I will reduce the value of the investment. So keeping that logic in mind, where the investments are acquired on come right basis. So it happens that you purchase the investment on come right basis. That is when the right issue was announced and before the cutoff date. Right issue was announced, but before the cutoff date you purchased the share and later you sold the rights. Later you sold the rights. And and the market value of the investment immediately after their becoming X right is lower than the cost for which they were acquired. So come right price is 150 rupees and X right price is 100 rupees. Market price became lower. Usually that is what happens because the number of shares increases. Then it may be appropriate to apply the sale proceeds of the right to reduce the carrying amount of such investment to market value. And suppose the sale proceeds of right is 50 rupees. Suppose the sale proceed of right is 50 rupees. What will be the treatment of sale proceeds of right? So what the learned students will do, they will write one example. Example write down. Example write down. Pawar. Pawar purchased shares of Zomato Limited on come right basis. Pawar purchased shares of Zomato Limited on come right basis at rupees 150 per share. Pawar sold right. Pawar sold right to Pawar sold right to Rahul at rupees 50 each. X right price is rupees 100. X right price is rupees 100. X right price is rupees 100. Pass journal entry. Pass journal entry in the books of Pawar for sale of right. Pass journal entry in the books of Pawar for sale of right. Pass journal entry in the books of Pawar for sale of right. Pass journal entry in the books of Pawar. So the entry will be bank account debit 50, bank account debit 50 to P&L account 50. Is it right or wrong? Or should it be to investment account? To investment account 50. What is the right entry? Bank to P&L account or bank to investment? Bank to P&L account or bank to investment? So the answer should be on the screen. Shares were purchased on comrade basis. That condition is satisfied. Market value after becoming X right is lower than the cost. Yes, market value is 100 rupees. Then sale proceeds of rights will be used to reduce the carrying amount of such investment to market value. So the correct answer would be bank to investment. Correct answer will be bank account debit 50 to investment account 50. Please write down bank account debit 50 to investment account 50. Bank account debit 50 to investment 50. Write the amount also. Write the amount. Okay. So this is the answer. Can I change the question slightly? Can I change the question slightly? So now write down, below write down in your book, suppose in the above example, suppose in the above example, X right price is rupees 110 and market and sale value of right and sale value of right is rupees 50 and sale value of right is rupees 50. Suppose in the above example, X right price is 110 and sale value of the right is 50. Pass journal entry. Every time my question is same, journal entry in the books of Pawar. Journal entry in the books of Pawar. So this time Pawar will receive 50 bank account debit 50. That is always simple thing. Amount received, bank to amount received 50. But what about the investment? To investment account. Investment value was 150. It has dropped by only 110 rupees. It has dropped to 110 rupees. So from 150 to 110 only. 150 to 110. So I will only reduce investment value by 40 rupees. Oh, what about the balance? Balance will be my income. Balance will be my income. So to P&L account. To the extent investment value falls after they are becoming X right, I will reduce. I will reduce. Okay. So noted. Yes, most of you got it right. Bank debit 50, P&L account 10, investment 40. Now we'll take one more example. Can I change this question again? Suppose in the above example, the X right price, ERP means X right price. In our example, ERP means X right price is rupees 100 and sale proceeds of right is rupees 30 only. And sale proceed of right is rupees 30 only. And sale proceed of right is rupees 30 only. So understand, come right price is 150, X right price is 100. So there is a drop in the share price by 50 rupees. But you have received only 30 rupees. So bank account debit 30, because I can't change bank figure. Is there a reduction in the value of the investment? Yes. To investment 30. So I will credit investment 30 only because I have received 30 only. So after passing this entry, your investment value will become 150 minus 130, that is 120 in the books of account. Investment will be 120 in the books of account, but its market price is 100 rupees. Then we have to check whether it is a current investment or a long-term investment. If it is current investment, then I will apply the rule cost or market value, whichever is lower, and I will have to write down 20 rupees more. But if it is a long-term investment, again I have to check whether this decline is temporary or permanent. If this decline is temporary, don't do anything. If the decline is permanent, you have to make a provision for 20 rupees loss. So I am not passing any entry after this because it depends on current investment or long-term investment. In case of long-term investment, whether decline is temporary or decline is permanent. That discussion we already had on the first day. Okay, can I change the question slightly? Say yes. Write one more question. Suppose in the above example, the X right price is rupees 160. Sale proceeds of right is rupees 50. Pass journal entry. Pass J. Oh my God. This condition has failed. What is the condition? X right price should be lower. We have purchased the share for 150, come right price. But in this example, the X right price is higher. This is share market, okay? Anything can happen. You will ask me, how can X right price be higher? Mathematically, it should not be higher. But practically in the stock market, share prices can zoom, sometime boom, sometime doom. So this zoom, boom, doom is the stock market all about. So it can go up. Now tell me the entry. I have received 50 rupees. Bank account debit 50. Are you writing? An entire amount will be transferred to P&L account, because this will be treated as my profit or income. Share price have not gone down only. The share price has not gone down. Why will I reduce the investment account? So don't adjust in investment, rather adjust in P&L account. So when will you adjust in investment account? When will you adjust in investment account when the ex right price is lower and the shares were purchased on come right basis? When will you not adjust in investment account? Either shares were not purchased on come right basis, either shares were not purchased on come right basis, or the price has gone up instead of going down. In that case, we will not adjust in investment account. We will adjust in P&L account. So I have written three cases in your book. Let us have a quick look. Examples are already dictated. When right shares offered are subscribed, case 1, easiest case. When right shares offered are subscribed, then you simply pass the entry for purchase of the shares. When the rights are not subscribed but rights are sold in the market, then situation number A, if investments were acquired on come right basis and the market value of investment immediately after their becoming X right is lower than the cost for which they were acquired, then in that case, sale proceed of right will be used to reduce the carrying amount of such investment to the market value. So this is one important point. When we sell the investment, it is credited to investment account. Condition number 1 and 2 you have to highlight. Condition number 1 is investments are acquired on come right basis. Condition number 2 is market value of investment after their becoming X right is lower than the cost. So I will call it condition 1, condition 2. If both conditions are yes, you will credit the right proceeds to investment, and the entry will be, as we have taken one example today, bank account debit to investment account. Bank account debit to investment account. Logic I have explained. Once again, if you purchase this blue pen with this black pen and you pay 150 rupees, then you sell this blue pen, reduce the price of this black pen. Now it is no longer 150, credit it, reduce it, because it was including the price of blue pen. But if the price goes up itself, then you don't do that adjustment. We will solve one question number 12 printed in your book. Just below that, question number 12, 100 shares of Info Company Limited purchased on come right basis. First condition is purchase must be on come right basis, come right price. This condition is satisfied. At rupees 150, 20 rights were offered which were renunciated at 1000 rupees. Market price is 140 each. There must be decrease in market price. There must be decrease in market price. Condition satisfied. Suggest the treatment of the amount received on the sale of right. Suggest the treatment of the amount received on sale of right. So please participate. What is the entry the dear students will pass? Yes, try yourself. You have purchased 100 shares at 150 each. So your cost is 15,000. Your market price became 100 into 140, 14,000. Market price is 14,000. So decline in market value is 1000 rupees. Decline in market value is 1000 rupees, and the amount received on sale of right is also 1000 rupees. Amount received is also 1000 rupees. So the entire amount 1000 rupees received will be used for reducing the carrying amount of investment. Will be used for reducing the carrying amount of investment. So write down the answer properly. Somebody has to check your answer also. So write down reduction in value of share hundred into 150 minus 100 into 140 1000. Sale proceeds of rights rupees 1000. This is given. Shares were purchased on come right basis. Shares were purchased on come right basis. Shares were purchased on come right basis. Now write down below journal entry. Both conditions are satisfied. So the entry will be bank account debit 1000 to investment account 1000 being sale proceeds of right credited to sale proceeds of rights credited to investment account being sale proceeds of right credited to investment account being sale proceeds of right credited to investment account being sale proceeds of right credited to investment account. A similar question is given below. 100 shares of Info Company Limited purchased come right at rupees 150 each. 20 right shares were offered, which were enunciated at rupees 1000. Market value after right issue is 146 now. 146. Suggests the treatment of amount received on sale of rights. What they have done, they have changed one number. Market price has not gone down by 1000 rupees this time. So I will try to explain in a simple manner. What is the sale proceeds of rights is given to you 1000 rupees. This time I am going to credit some portion to investment account and some portion to P&L account. So reduction in share value to that extent, I am going to credit the investment account. So calculate 15,000 minus 14,600, reduction in share value 1400, and others balancing figure 1000 minus 400, 600. Okay, so what is the journal entry will pass now? Write down journal entry. Bank account debit 1000, this figure, to investment account only 400 to the extent of decline in value, and excess amount is your income 600 rupees. So this is the journal entry for this question. So these two questions were asked together in the exam for something like 2 to 4 marks. So maybe both questions together will be 4 marks question. Okay. The same question continues below. Next question 14. Next question 14. 100 shares of Info Company Limited were purchased at rupees 150 each. 20 right shares were offered. 20 right shares were offered, which were renunciated at rupees 1000. Market price of the share after their becoming right issue is 136 each. Oh my god. Suggests the treatment of the amount received on sale of right. So this time the market price has gone down a lot. So what is the reduction in market value of share? What is the reduction in market value of shares? So reduction in market value of share will be 100 into 150 minus 100 into 136. So tell me the answer. 100 into 150, 15,000 minus 13,600. Should it be 1400? And what is the sale proceeds of right? Sale proceeds of rights is 1000 only. Shares were acquired on come right basis. Shares were acquired on come right basis. Journal entry. We have received only 1000 rupees. We have received only 1000 rupees. Bank account debit 1000. Investment account 1000. Bank account debit 1000 to investment account 1000 and write a note. Further treatment will depend upon the classification of investment. Will depend on the classification of investment. Further treatment will depend upon the classification of investment. Further treatment will depend upon the classification of investment. Is it right now? So this is example on situation A. What is situation A? Situation A is shares are purchased on come right basis and market price becomes lower. Now you will find in your book it is written situation B. Below example 14, there is a situation B. It says that investments are acquired on come right basis, but the market price becomes higher than the cost for which they were acquired. Means shares are purchased on 150, but market price becomes higher than the cost. The market price becomes higher than the cost. The market price becomes higher than the cost. Oh my God. So now what will you do if you receive some amount? What will you do if you receive some amount on sale of investment? Transfer the entire amount to P&L account. Transfer the entire amount to P&L account. So let us solve this wonderful example Number 15. 100 shares of Info Company Limited purchased at 150 each. Rights shares were offered which were enunciated at 1000 rupees. Market price of shares after right issue is 150 each. Oh my god. Market price have gone up. Suggest the treatment of the amount received on sale of right. So you will understand now this time condition 1. Shares are acquired on come right basis. Condition satisfied. Condition satisfied. And condition number 2 was X right price should be lower than cost. This condition not satisfied. This condition not satisfied. This condition not satisfied. Therefore, sale proceeds of rights will be credited to P&L account. Will be credited to P&L account. So the journal entry for this question will be bank account debit 1000. The entire amount will be transferred to P&L account, being sale proceeds of rights credited to profit and loss account. Being sale proceeds of right credited to profit and loss account. So this is my situation number B, and then I will take situation number C, the last situation on right issue. Last situation on right issue, where the investments are acquired on any other basis. Any other basis, write down, not on come right basis. Not on come right basis. So first condition fails here. So the first condition fails here. If the first condition fails here, the answer is sale proceeds will be taken to profit and loss account. The sale proceeds will be taken to profit and loss account. Only in situation 1, sale proceed will be taken to investment account to the extent there is a reduction in the cost or the price of the share. To the extent there will be reduction in the price of the share. To the extent there is going to be reduction in the price of the share. But in other cases, you are going to credit the sale proceed of right to profit and loss account. Is it right? Now, this diagram will just summarize. So today we'll summarize this diagram, right issue, and as a homework what you will do, you will revise the whole chapter today so that you are ready tomorrow for the questions on equity shares. So tomorrow's day very important, because recent exam there was a 20-mark question on investment accounting. Oh my god, but for that you need to understand. So let us come to this diagram. If right shares are subscribed, cost of right share will be added to original carrying amount. Rights are renounced without consideration. So Dhruv gave his right to his friend Sanket without consideration. Since no consideration is involved, no journal entry will be passed. Rights are sold. Shares are acquired on come right basis and market price becomes lower than the cost, then we will use the sale proceed of right to reduce the investment value by crediting the investment account. And if the shares are acquired on come right basis but market price is higher, market price is higher, the share must have been purchased on come right basis but market price is higher, you will credit it to P&L account. In other cases also, when shares are not purchased on come right basis, sale proceeds of right will be credited to P&L account. And suppose you don't take any action, the last situation, you don't take any action, let the right lapse, no accounting treatment. However, any further change in the value of share will be accounted depending upon its classification, whether the classification is current investment or long term investment. Okay, and accordingly the accounting will be done. So today we'll stop here. We have almost completed the theory part. Tomorrow, the whole day, we are going to solve question on investment in shares. Thank you. All the best. Enjoy your day. Bye bye.